If you're 65 or older, there are three things happening to your money right now in August 2026, and every single one of them has a specific action attached to it. Not something to think about someday. An actual step with a form number or a phone call attached to it, something you can finish before the end of this week. And here's the part that should bother you a little. None of the three arrived with a letter explaining what to do. Nobody from the Social Security Administration, nobody from Medicare, nobody from the IRS called your house and walked you through it. The system doesn't work that way. It quietly makes the calculation, it quietly applies the rule, and then it waits to see whether you figure out on your own that something changed. Most people don't. And the ones who don't are the ones leaving real money sitting there unclaimed every single month. I'm going to walk you through all three of these today, one at a time, in plain language, with the exact thing you need to say when you make the call. Stay with me until the end, because the third one is the one that costs people the most money every single year, and it's also the easiest one on this list to fix. It takes one phone call and about 5 minutes. Before I get into the details, if you're not subscribed to this channel yet, go ahead and do that now, and turn on the notification bell while you're at it. Here's why that actually matters for your situation specifically. The rules around Social Security, Medicare, and IRS filings for seniors change constantly, sometimes several times a year. And when they change, nobody sends you a personal letter explaining exactly what it means for your income. This channel exists to close that gap. We go through the actual releases from the Social Security Administration, from the Centers for Medicare and Medicaid Services, and from the IRS, and we translate them into plain English with a specific next step attached. Your Social Security benefit went up this year. The official cost of living adjustment for 2026 was 2.8%, and for the average retiree collecting around $2,000 a month, that works out to about $56 of additional income. That's the number that made headlines back when it was announced. That's the number most people expected to see show up in their January deposit. But here's what almost nobody explained clearly at the time. Medicare Part B premiums went up in the exact same month, and they went up by a lot more than usual. The standard Part B premium climbed from $185 a month in 2025 to $202.90 in 2026. That's an increase of $17.90. And because Part B premiums are automatically deducted from your Social Security check before the money ever reaches your bank account, that increase came straight out of your raise before you ever saw a dollar of it. When you actually do the math, a retiree receiving the average benefit saw their real net increase land closer to $38 a month, not $56. Nearly a third of the entire cost of living adjustment disappeared into the Medicare premium increase before it ever touched your account. And this wasn't a small ordinary increase either. Percentage-wise, the Part B premium rose almost 3.5 times faster than the Social Security cost of living adjustment itself. Here's what I want you to actually do, and I want you to do it today rather than putting it off. Pull up your bank statement or your Social Security deposit history and look at your January 2026 deposit. Then look at your December 2025 deposit sitting right above it. Subtract the smaller from the larger. That difference is your real net cost of living increase for this year. The number that actually matters, not the headline percentage that gets repeated on the news. For most people, that number will be smaller than they expected, and now you understand exactly why. There's one more piece of this I want to walk you through, because it protects a specific group of people and almost nobody knows to check for it. There's a rule buried in Social Security law called the Hold Harmless provision. Under this rule, if your Medicare Part B premium is deducted directly from your Social Security check, that premium is not allowed to increase by more than your dollar amount cost of living increase in any given year. In plain English, your net Social Security payment is not allowed to go down because of a Medicare premium hike, even if the premium technically rose by more than your raise did. For people whose individual cost of living increase in dollar terms came out smaller than $17.90, the Hold Harmless provision automatically capped their Part B increase at whatever their actual raise was, protecting them from a shrinking check. If you go back and compare your two deposits and the numbers don't quite add up the way I just described, or if your check looks smaller than it should even after accounting for the premium, call the Social Security Administration directly and ask them this exact question. Say, I want to confirm whether the hold harmless provision was applied to my account for 2026. That specific phrasing tells the representative exactly which rule to check your file against, rather than giving you a generic explanation that doesn't actually answer your question. Let me give you an example of exactly how this plays out for a real person, because the numbers only really land once you picture someone going through it. Think of a retired school cafeteria worker collecting a modest benefit of around $1,400 a month. When her cost of living increase arrived in January, she expected to see roughly $40 extra based on what she'd heard on the news about the 2.8% adjustment. Instead, her deposit only went up by about $25. For a few months, she assumed she'd simply misunderstood the announcement or that something had gone wrong. It wasn't until her daughter sat down with her and pulled up both deposits side by side that they realized the Medicare Part B increase had eaten almost half of her raise before it ever reached her account. And because her dollar increase was on the smaller side, the hold harmless provision had already stepped in to prevent things from getting worse. Though nobody had ever explained that to her directly, she hadn't done anything wrong and nothing needed to be fixed in her case, but she spent months quietly worried that her check had been shorted simply because no one had walked her through the math. That's the entire point of checking these two numbers yourself rather than relying on the headline percentage. Sometimes everything is working exactly as it should, and the only thing missing is the explanation. Now let's move to the second one, and this one involves a tax return that a lot of you already filed earlier this year without necessarily getting the full benefit you were entitled to. Starting with the 2025 tax year, the one most of you filed this past spring, every taxpayer who is 65 or older by the end of the year qualifies for a brand new deduction worth $6,000. If you're married and both you and your spouse are 65 or older, that doubles to $12,000 combined. This is not a replacement for your existing standard deduction. It stacks directly on top of it. And here's the detail that trips a lot of people up. You get this deduction whether you itemize your return or take the standard deduction. It doesn't matter which way you file. It's simply an additional $6,000 or $12,000 for a qualifying couple that comes straight off your taxable income. There is an income limit attached to this one, so let me walk you through exactly where it applies and where it starts to shrink. The full deduction is available if your modified adjusted gross income is under $75,000 as a single filer, or under $150,000 for a married couple filing jointly. Above those thresholds, the deduction phases out gradually, reducing by about 6 cents for every dollar of income above the limit, and it disappears completely somewhere around $175,000 for a single filer, or $250,000 for a married couple. For the large majority of retirees living on Social Security, a modest pension, and some retirement account withdrawals, this means the full $6,000 or $12,000 deduction is sitting there, available, whether your tax preparer caught it or not. And that's exactly the problem. Most tax preparers are moving quickly through a stack of returns during filing season, and this deduction is brand new this year. It's easy to miss, especially if a preparer is using older software templates or simply isn't yet familiar with this specific provision from the tax law changes that passed last year. So here's what I want you to do. Go find your 2025 federal tax return right now, today if you can. It's either sitting with your preparer, saved in your email if you filed with software, or you can pull a free transcript directly from the IRS website using their Get Transcript tool. Open it up and look specifically for a line item reducing your adjusted gross income by $6,000 if you're single, or $12,000 if you're a married couple where both of you are 65 or older. If you see that line, congratulations, your return was filed correctly and you already received the benefit. If you don't see it anywhere on the return, call your preparer this week and ask them this exact question. Say, Was the new $6,000 senior bonus deduction from the recent tax law applied to my 2025 return? Don't ask a general question about deductions. Ask specifically about that deduction by name, because a preparer who is current on this year's tax law changes will be able to answer you immediately and specifically, and one who hesitates or seems unfamiliar with it is telling you something important. If the deduction was missed, the fix is a form called the 1040-X, which is simply an amended return. Filing it to add a missed deduction is a straightforward process, and you have years to do it, so there's no reason to panic. But I do want to be direct about something. Every month that Refund sits unclaimed in the IRS system is a month. It's not sitting in your bank account earning you anything at all. If you're owed $1,300 or more, depending on your tax bracket, the sooner you file that amendment, the sooner that money actually becomes useful to you rather than sitting in a government database with your name attached to it. I want to tell you about a retired postal worker who ran into exactly this situation earlier this year. He and his wife are both over 65, both living on a combination of Social Security and a modest pension, well under the income limits for the full deduction. Their return was prepared by the same tax office they'd used for over a decade. When they finally sat down and pulled up their filed return after hearing about this deduction from a neighbor, the $12,000 senior bonus simply wasn't there. Nothing malicious had happened. The preparer was simply working through a large volume of returns during a busy season with a brand new provision that had only existed for a matter of weeks, and it slipped through. Once they caught it and filed the amendment, they received a refund of just under $2,800, money that had been legally theirs the entire time, sitting in the system, waiting for someone to notice it was missing. The only reason they caught it at all was that they went back and looked at the actual line items instead of assuming the preparer had automatically applied every new provision correctly. The fact that you're still watching this tells me something. Most people click on a video like this, watch for a minute or two, and move on without ever taking action. You're still here, which tells me you're serious about making sure you're not leaving money on the table. If you haven't subscribed yet, now is a good time to do it, because what's coming in future videos is exactly this kind of specific, actionable update, the kind most seniors find out about 6 months after it would have actually helped them. Now let's get to the third one, and I saved this for last on purpose, because out of the 3 changes we're covering today, this is the one that quietly costs people the most money every single year, and it's also the one you can actually verify and fix in the next few minutes. In 2026, every Medicare Part D prescription drug plan and every Medicare Advantage plan that includes drug coverage has a hard annual cap on what you personally pay out of pocket for covered medications. That cap is $2,100. Here's exactly what that means in plain terms. Once your out-of-pocket spending on covered Part D drugs hits $2,100 in a calendar year, your cost for every additional covered medication drops to $0 for the rest of that year. Not reduced, not discounted. $0. Your plan covers 100% of the cost of your covered prescriptions from that point forward until the calendar flips over to January 1st. To put this in perspective, before this cap existed, seniors managing serious conditions like cancer, diabetes, heart disease, or autoimmune disorders could easily spend $8,000 or more out of pocket in a single year just on their prescriptions before reaching anything resembling catastrophic coverage protection. That threshold has come down dramatically over the past couple of years, and in 2026, it sits at $2,100. That is a genuinely significant change in how much protection retirees have against high drug costs, and it happens automatically. You don't need to sign up for it separately. Your plan tracks your spending behind the scenes, and once you cross that threshold, the pharmacy system is supposed to reflect it immediately. Here's why I'm bringing this up specifically right now, in August, rather than back in January when the rule first took effect for this year. The cap resets to $0 every single January 1st. That means everyone starts back at zero and begins accumulating out-of-pocket spending toward that $2,100 limit all over again each year. For seniors taking regular higher-cost medications, especially for chronic conditions, it's extremely common to reach that threshold sometime in the spring or summer, well before the year ends. Right now, in the middle of the year is exactly the point where a meaningful number of people have either already crossed that cap or are getting very close to it. And here's the problem I want to make sure you understand. Some people who have already crossed the threshold are still being charged for their prescriptions at the pharmacy counter, simply because nobody checked, and the system doesn't proactively tell you that you've crossed it. So here's exactly what I want you to do, and I want you to do this today, not this weekend. Call your Part D plan using the member services number printed on the back of your insurance card and ask them this exact question. Say, can you tell me my year-to-date out-of-pocket spending that counts toward the $2,100 cap? Most plans can also show you this same information inside their online member portal, usually somewhere under your benefit summary or your prescription history section. Get the exact number. If you've already spent $2,100 or more on covered drugs this year, every covered prescription you fill between now and December 31st should cost you nothing at the counter. If your pharmacy charges you anyway after you've crossed that threshold, call your plan the same day. Don't just pay it and assume it will sort itself out later. Dispute it immediately, because that money is supposed to be refunded to you, and the sooner you flag it, the easier that process tends to be. If you haven't reached the cap yet, but you're taking regular medications that are likely to get you close before the year ends, knowing your current number still matters, because it lets you budget accurately for the rest of the year and know roughly when your costs are going to drop to zero. Here's a situation that plays out more often than you'd think. A retired machinist managing both diabetes and a heart condition was filling 4 different prescriptions every month, and by early summer he had already crossed well past the $2,100 threshold without realizing it, because he'd simply gotten used to paying a certain amount at the pharmacy counter every time and never stopped to add it up. He kept paying the same co-pays out of habit for months after he should have been paying nothing at all. It wasn't until his pharmacist happened to mention the new cap in passing that he called his plan, confirmed he'd crossed the threshold months earlier, and got the overcharged amount refunded. That's real money that almost stayed in the pharmacy's register simply because nobody double-checked the number. And I'll mention one more detail here that's worth knowing, because it can affect how quickly you reach that cap in the first place. As part of ongoing Medicare drug price negotiations, the federal government secured lower prices on a number of high-cost medications that took effect this year, including widely used drugs for blood clots, heart failure, diabetes, and certain autoimmune conditions. If you're taking any of those, your out-of-pocket cost per prescription may already be lower than it was last year, which means you might reach that $2,100 cap at a different point in the year than you would have otherwise. It's one more reason to call your plan and get your actual current number rather than guessing based on last year's pattern. One last distinction worth understanding clearly. The $2,100 cap applies specifically to drugs covered under Medicare Part D. Medications administered in a doctor's office, an infusion center, or delivered as part of certain cancer treatments are typically billed under Medicare Part B instead, and they follow different cost-sharing rules entirely. They don't count toward this particular cap. So if part of your treatment involves infusions or in-office medications, your full drug cost exposure for the year includes both categories, not just what shows up at the pharmacy counter. So let's bring all 3 of these together, because everything we've walked through today comes down to 3 specific numbers. And checking all 3 shouldn't take you more than about 30 minutes total this week. The first number is your January 2026 Social Security deposit minus your December 2025 deposit. That difference is your real net cost of living increase, not the headline percentage. If it looks smaller than expected and you're not sure why, call Social Security and ask specifically about about the hold harmless provision being applied to your account. The second number is sitting inside your 2025 federal tax return. Look for that $6,000 deduction if you're single, or $12,000 if you're a married couple both over 65. If it's there, you got the benefit. If it's missing, call your preparer and ask that specific question about the senior bonus deduction. And if it turns out it was missed, file the 1040-X to claim what you're owed. And the third number is your year-to-date spending against the $2,100 Part D drug cost cap. Call your plan today, get the exact figure, and confirm at your next pharmacy visit that you're being charged correctly based on where you actually stand. None of these three things happen automatically just because you technically qualify for them. The cost of living adjustment shows up on its own, but recovering money through the hold harmless provision requires you to actually check the numbers and make a call if something looks off. The senior deduction exists in the tax code, but it only helps you if it was actually applied correctly on your specific return. And the Part D cap protects you automatically once you cross it, but only if you or your pharmacy actually knows that you've crossed it. The system isn't designed to chase you down and hand you this money. It's designed to sit there quietly and wait to see whether you ask. The people who end up capturing every dollar they're entitled to aren't the ones with complicated financial situations or expensive advisors. They're simply the ones who knew which three numbers to check this month, and who actually took the 10 or 15 minutes to check them before the window closed. If this video helped you today, do one thing for me before you go. Send it to one person you know who's over 65, a parent, a neighbor, someone from your church or your community. One share from you might be the exact thing that puts real money back into their pocket this year. Money that's already legally theirs, just sitting there unclaimed because nobody happened to tell them where to look. I'll see you in the next one.